Got a question here from Leo who says, one of the biggest things that I struggle with is when to sell. Oftentimes I stop out of an option only to see that you're still in it and making money on it. Also, can you go over how you choose what option to get into, why you choose that date and strike price? For my trades, Leo, when I enter into a trade, and my stop loss and my target, it's always based on what the chart says. It's never based off of a percentage or money. Yes, those two things that I do look at, but when I enter into the trade, I have a plan. So I can pull up this chart right here. It's going to be Google, and this is a trade that I took today. So for Google, you'll see just previous price action shows resistance support right up here. If you drag these two things over, this is how I executed the trade today. So when Google opened up here and it popped up into this zone, I end up adding into puts. So it gets a nice pullback down right here, taking profit, little day trade scalp absolutely can be perfect, but it gets a pop back up, starts to get another move down, and then it comes right back all the way up here. During this time, most likely, this is where you would be like, yeah, I'm going to exit this trade right here. And then it enters into that zone again, still rejecting that area. And it's the reason why I took this trade in the first place until it proves me otherwise. And then it gets to move all the way down to right there. So again, for you saying like, you get out of position, but I imagine you're in my Discord and then you see that I'm still in it making money on it. It's because I'm watching the chart and not really watching my P&L until we start to hit those areas where I know my stop loss is on the chart and where my target is on the chart as well. Now, when it comes to choosing what date and strike price, it also comes down to, is this going to be a day trade or a swing trade? Is this based off a 5, 10, and 15-minute chart? Or is this based off a 4-hour daily and weekly chart? That's going to determine what strike price and expiration I'm going to get into. For Google here, if you're looking to take it from, one zone to the next, this can be a nice day trade from boom here to here. I can take weekly contracts. This is based off of, previous price action, just showing here on a smaller time frame. This is the 5-minute chart. I can take weekly puts. If it's at 318, for me, I like looking at options that have good volume and a delta over 0.2. So looking to take the option essentially from out of the money to into the money. If it goes into the money, the delta increases, the premium starts to really get juiced up. So that can help me make more money on the trade. When it comes to swing trading, same thing, same approach, just on larger time frame. Again, it comes down to, is there volume on this contract here, and then the strike price. Sometimes it comes down to, does it fit the budget that I'm looking for this trade? I don't want to be spending $1,000 per contract. Looking for contracts that are around, for me, $200 to $300 per contract. I think is fair. I can take 10 contracts, have a $2,000 to $3,000 position, as long as they have good volume. Looking at the delta again over 0.20, and then eventually taking those contracts from out of the money to in the money.